Hey everybody, welcome back to Multifamily Unplugged. Good morning. I hope that you are having a great weekend and Saturday, right? What are you up to today? Are you still working or maybe catching up from the week, or are you enjoying some downtime this weekend? Whatever you're doing, I hope you're being intentional about it. That's a big thing for me is the intentionality in what we do and how we take action in our life, in our business. Whatever our goals are, right? We have to set those intentions on a daily basis. Hey, here we are, at the end of 2025. How was your year? How did it shake out for you? Did you achieve your goals? Did you come close? Did you miss? Did you overachieve? How'd you do in 2025? I always say that when we start to get ready to set goals, our goals for ourselves for the new year, that we need to take inventory. We need to take a look at where we've been, what's been going on, what's worked for us, what hasn't worked for us, and where we need to pivot, where we need to shift and make those changes in order to make the next year even better. Hey, maybe you're somebody who doesn't set goals. Maybe maybe your goal or method and how you do your day is just to be better than you were yesterday. And that's perfectly okay too. But however you choose to operate, I hope that as you go into 2026, that you start to look at things a little bit differently. Here's what I know about upcoming 2026, that the real estate market's changing, that the traditional way of selling real estate is as much as you can still do that, there's other alternatives today. One of the things that I've gotten very aggressive in lately is, again, buying real estate with little or no money down. And if you're somebody who has an interest in that, reach out to me. I'd love to connect with you. If this is the first time that you're listening to this podcast, welcome. I hope that you follow us, like us, love us, subscribe to our channel, because we're always bringing great guests to the platform, just like today. My guest today, I'm super excited about. He's from Raleigh, North Carolina, and some of my best friends in the world live in North Carolina. So this should be a great conversation and a new relationship to build. But Kenny Bedwell, he's with STR Industries, and we're going to talk about short-term rentals. So let me bring Kenny in real quick. Kenny, good morning.
Good morning. I'm glad to be here. I'm super excited.
Yeah, I'm excited to have you too. And like I said, man, I have two of my best friends in the world live in North Carolina, one in Wilmington and one in Southport. And so maybe this is a new relationship for us. So
yeah. Wilmington's love that area. So yeah, that's awesome. Okay.
Yeah. Cool. One of my buddies who's in Southport was up in the Greensboro area for years. He owned a couple of Remax offices up there, was heavy in real estate, still is today. Said he retired, moved to Southport and retired, but they opened a shop up there again and selling a ton of real estate. But somebody I grew up with in the real estate business, and
there's, it's funny when people ask me, like, when are you going to retire from real estate? And I was like, does one ever actually retire from real estate? You just keep it going. So
I know, it's crazy, isn't it?
Yeah.
Hey, so listen, as we kick this thing off, one of the things I always ask my guests is, in one word, what best describes you personally and professionally?
Yeah. I know you prepped me beforehand on this one, and I appreciate that. It's funny. I would like to, so the one word I would like to consider myself as, I don't know if I can truly, this is what I strive for, is probably the best way to put it. The word I just want to be known as is, integrity. That's the word that comes to mind, having integrity in this business. There's a lot of people at real estate can bring out the best and the worst in people. And I've seen both. And the last thing that I want to do for my clients or, anybody that I work with is, cover something up or not tell the full truth or whatever, because that's how people lose money and that can really set them back financially. And so that's the word I'm striving to obtain is integrity. But probably when people talk to me, though, if you just ask a stranger that knows me well, and they didn't say integrity, that the word would probably be frank. I'm very frank. I don't like to sugarcoat things. I tell it how I see it. And I share everything. I don't hold back, because I believe that's how people actually obtain success, is hearing there's no secrets. It's like, this is how I do it. This is how I did it. Here are the numbers. You can go out and do the same thing.
Yeah, I love that. I love both those words, frank and integrity. I mean, you can't hide things. You can't skirt things. You have to tell the truth. You have to be transparent. And because of me in the past not being totally transparent, I had mistakes. I made mistakes as a result of that. And not that integrity, I think, has always been a core value, but I think we get caught up sometimes in what's going on, and it can become hard to remember that.
Yeah.
So, I think when it's more embedded in you, it's easier to remember.
Absolutely.
Do you think that you have always had that core value, or do you think that was something you developed over, years?
I think it's definitely developed. And look, my background, I worked at Citibank. I used to be a 9 to 5 guy, corporate guy. I was a data analyst. And, it's very like binary. You show up to work, you do your job, you get paid, you get a raise, your job, your boss pats you on the back. Good job. Like, that's it, right? When you get involved in real estate investing, there's a ton of things that could go wrong in a deal. And there's a ton of, there's a ton of emotions as well. And so, as I experienced, for example, working with clients, so I'm in the short-term rental industry, and one of the biggest problems in the short-term rentals industry is regulation. We deal with ton of regulation, and not only regulation, but also neighbors. And there's deed restrictions, and there's all these little pieces that could completely destroy a deal. And so, sometimes when I'm working with, a real estate agent with a client, so I consult, I help people find deals and, connect them to these people. The agent will tell me, hey, look, we saw that there's a deed restriction for this property, but, we don't think anybody knows about it. We don't think the neighbors know about it. We don't think it's a big deal. Should we tell the client? And I'm like, yes, we should definitely tell the client. It's like, you should definitely tell, like, it might appear not to be a big deal, but I've seen people get burned, and that's come from experience in our space. And I've personally been burned too. And so it's just been one thing to just, hey, you know what? Here is everything that you need to know to make a wise, financial, prudent decision. Now that you have all this information, it's, your responsibility as the person buying the property to take on the risk. But I think that integrity is absolutely crucial in our industry. We need more people like that. And that's why I strive to do that. I'm not perfect by any means, but I strive to do that. So,
yeah. Isn't it interesting? You say, yes, we should tell the client, but then it makes you wonder how many things happened that they didn't tell you about. Right.
Exactly. Oh yeah. Yeah. Well, and then once you say that, then they start to, then the agents are like, well, do I need to tell this guy everything? Cause he's trying to nuke the deal. And that's not the point, And so, anyway, it's just, I can go off about that, but.
Well, spend a couple minutes, talk about your background a little bit more. Sure. You were at Citibank and, trading time for dollars, and, how'd you get into real estate investing? What was, and talk a little bit about STR right now.
Yeah, absolutely. So I purchased my first duplex in 2017. My wife and I was working at Citi. I was actually in Buffalo, New York at the time. So I was working at Citibank in Buffalo, New York, and I bought my duplex, and we were going to house hack, live on one side, rent out the other side. I was showing up to the REI real estate investment meetings, local, really it was these older gentlemen getting together, talking about all the apartments and multifamily complexes they owned. And, for me, I mean, that was who I was surrounded by. So I was like, well, I'm going to do the same thing. That sounds interesting. And, I want to build wealth, and I don't just want to buy stocks and bonds and ETFs and mutual funds and crypto. I want to do, real estate. And so we got the duplex. I'm showing up to the meetings, and there was one guy there who told me, he's like, look, I have a duplex and I'm renting out one side on Airbnb, and I'm making 3 times the rent that I would as a long-term rental through Airbnb. And so my wife and I had used Airbnb at the time, and we're like, why don't we try it? Worst case scenario, it doesn't work out, and we just rent it long term. And that's exactly what we did. And we got the same results as that guy did. We were making about 3 times the amount of rent through Airbnb than we would have as a long-term rental. And so I started to double down. I was like, well, awesome. I've proven it. Let me go find a better location and a better property. And I bought a triplex downtown Buffalo. And then I did a duplex and a few more properties. I started to manage some properties. And that's really where I started to grow my portfolio in the short-term rental industry. Now, fast forward to today, where we fought regulations. Buffalo is virtually not banned short-term rentals, but made it very restrictive. And I've exited that market from the short-term rental standpoint. I still have long-term rentals there, and they do quite well. And I have a mid-term rental there as well. But I have property. I've gone more towards vacation markets, and I have property in the Finger Lakes of New York, in North Carolina, in Asheville, Kentucky, Texas, Arizona, and I own a boutique hotel now in New Orleans. So I am all over the place.
Wow. Good for you. And, your short-term rentals, are they all duplexes? Are they all single family?
No, not anymore. But I still love that strategy though, because here's the thing, especially in an urban market. So all my properties I've positioned more into vacation markets. So Bourbon Trail, the other property, I guess we have a kind of urban market. It's Fort Worth area, Fort Worth, Dallas. But it's a big 7-bedroom. And then we have one in Flagstaff, Arizona. And the one in Kentucky is the Bourbon Trail in Asheville. And so those properties are just like big houses. But the ones in Buffalo I started with there were big houses, but they had 2, it was like an upper lower or a side by side, or, a triplex, like upper 2 lowers. But what we would do is rent them out as separate units. And then in the summertime, in the fall, when there was a lot of weddings, big groups traveling, we would actually rent out the entire building as one, because you could, right? Because people are coming and going, and you can, like if people book out in advance, they can book the whole house, and we would actually make 2 times what we were making as renting them out individually. So it's very lucrative to have what we call a parent-child listing combination, where the child listings are the individual listings, the parent listing is the overall house. And it was a great way to kind of take advantage of if these large groups that wanted to come in during certain seasons of the year, and then during the off seasons when big groups aren't traveling, like in the middle of wintertime and there's like 6 feet of snow in Buffalo, it would just be like, come rent this apartment, and it would still get rented out, and we'd have higher occupancy and higher numbers. And it's actually a really great play that, especially for people who are trying to get started in the short-term rental space and maybe don't have as much capital, that's a great play to get involved into, because you can maximize occupancy, which boosts your revenue.
So how do you go from Buffalo to Dallas to Tucson with buying properties, right?
So my company, STR Insights, we do consulting, but we also have a data platform. So when I brought in my experience from Citibank, and when I was looking to invest outside of Buffalo, New York, I realized that I didn't know, it's kind of dumb realizations, but I realized I didn't know all the markets out there. There's a ton of vacation markets out there, but the problem is you only know what you know, right? Yeah. And so this is where data becomes important. It exposes you to new areas that are performing well based on the prices of real estate and the revenue and the performance of short-term rentals in those markets. If you put those 2 things together, we have what we call a gross yield or gross ROI. This is simply like, how do properties perform on average in these markets? And then you just sort them based on the top, markets. And so by doing that, I was able to find new places to invest in. Once I do the research, check the regulations, see that it's friendly, boom, I'm finding good opportunities all around the country. And I truly believe in diversification. My Asheville property, we were setting it up when, I don't know if you remember, Hurricane Helene hit Asheville last year in October. It was devastating, wrecked the area. Yep. We were setting up a short-term rental property when that hurricane hit. I mean, it set us back 3 months due to the damages and all the issues. And so if I had my entire portfolio in Asheville, North Carolina, and nowhere else, I mean, I would have been probably bankrupt. but thankfully we had properties in other areas that could offset that loss of income. And so, but a lot of that and finding those new areas requires research and looking at the data and understanding where you can invest that makes sense based on demand and prices and revenue.
And so when you talk about vacation markets, so are you, when you set up your STRs in those vacation markets, are they like an experience? Like, and I'll give you an example. I know a guy in Chicago who's got a condo in urban market, but it comes with a golf package and a boat. And, it's a real experience when you go and stay in this Airbnb, right?
Yeah. So I would probably, yes. If you're comparing it to that, so my properties right now are very amenity heavy experience based. So for example, let's take the Dallas property or the Fort Worth property. If you're in Dallas, I apologize. It's in Fort Worth, but for everyone else in the country, we say Dallas. So whatever.
Yeah, right.
Yeah. So
I've been like that for years.
The same thing, but yes, it's I've learned. I've been corrected several times, but I still, So the Fort Worth property, who are we trying to target? We're trying to target families, people looking, visiting the area, people coming in for, Fort Worth, Arlington. There's the Dallas Cowboys, sports, whatever, the groups coming in. This is a 7-bedroom, four bathhouse. This house has our prized amenity that we have besides the heated and chilled pool and 2 hot tubs and pickleball court and massive fire pit and a giant playground package thing and mini putt. We have and most people have never seen these before. We have a 3-screened or 3-projector golf or sports simulator. It does over 90 different games, and it's surround. So like you literally step into this thing and you can do any sort of sport you want. It's got 3 projectors like projecting onto the thing. And it's insane. It's like the coolest thing you've ever seen in terms of like, if you want to do sports, like without actually playing the sport. And I mean, you do baseball, football, whatever. And it's got these different games you can play. And we have a theater.
I don't mean to cut you off. I really think this is a great place for you and I to meet in person.
Yeah, yes. Well, it depends. I mean, that one's like family friendly. The Bourbon Trail property in Kentucky, which is towards adults. I mean, that one's more towards, hanging out. Like, I actually really like that property because we've got 2 hot tubs. We have a regular like golf simulator, but it's got more of like a hangout space where there's other types of games, pool and foosball, and there's a really cool theater room in that one. There's a gym, there's a sauna, it's more of like they're kind of like little mini micro resorts. You know what I mean? And let's talk the numbers. I mean, this stuff sounds all cool, but it's expensive. We put about $350,000 to $450,000 into these properties besides the down payment. So we're putting in $500,000 to $600,000 total into these properties that we're doing as short-term rentals. I didn't start out that way. I'm not like I'm not like Donald Trump, like I took $1 million loan. No, none of that crap. No, I started out with these duplexes, but I've grown, I've scaled. Right.
Are you buying these brand new, or are you buying them existing and you have to go in and do a bunch of work to them? Or,
my wife and I bought a property in 2022. It's the only time I think my wife and I almost got a divorce is because we bought a property that was already furnished, and we showed up and we're like, we're just going to, replace a few things, and it's going to take us a week. 5 weeks later, after we had to completely, because stuff was broken and just old, and we're just like, we just have to junk it all. And I'm like, I'm never going to buy another house that's furnished or ready to go again. I prefer a blank, clean slate. So we're buying properties. They might not be new construction, but we're buying properties that are basically empty and completely furnishing them and designing them around, our specific guest avatar and what we want to accomplish from the ground up.
Okay. Interesting. Yeah. They sound like great experiences. And what's your ROI on, let's just take that Fort Worth property, right? And, you've got $400,000 into that property. Go back to the numbers.
So The Fort Worth one, I can tell you the projected because we haven't hit a full year yet. But so we spent, so we're all in at 400K with the furnish, so about 500K. We should net year one. I think we'll net about, we'll probably net around 100. So we shoot for about 20% return.
Okay.
So the Bourbon Trail property though, that one's been the biggest, one of our best home runs so far. That one's also longer. We bought that one for $1 million. We put about 550 into it with the down payment. And that one will gross 375, but we'll net 175 on that property.
Wow, nice. And are you buying these all traditional? So you're going to the bank, you're getting financing, or are you doing any owner financing? Are you raising capital?
Yeah. So I do partner, like I have a business partner and we either go in together or he brings more capital. I'm the finder. I know where to look. I know what to look for, but essentially, yeah, we are going through traditional banks and financing. Now I am very opinionated. I'm going to I'll give a minute soapbox speech about owner financing or seller financing and short-term rentals. Look, I think owner financing, seller financing is a great and tremendous opportunity for getting into deals, but not into short-term rentals. And the reason why is because if it would be a good short-term rental, it would not be owner finance. They would sell it on the market. They'd be able to sell it on the market because it's in the right location. Short-term rentals have to be in a good location. They have to have really cool, they have to have amenities and things like that. And so typically, in my experience, a lot of the owner finance deals we see out there that are also Airbnbs, they might make sense because they have a lower interest rate, like that's attractive, but then they don't make the revenue. But no one knows that because they don't know how to project the revenue. And so it's really important that when we're underwriting deals, we don't just get caught up in, oh, what's the debt service or my monthly mortgage payment, but what's the actual revenue of the properties? I mean, I have a property I bought at the height of the interest rate environment. It's in the high sevens, okay, from a bank, traditional financing. I put 20% down. A short-term rental, it nets, I bought it for $350,000. It nets $80K. And I have a 7.85% interest rate. It's being refinanced as we speak, but like, sure, we can always refinance in the future. It's not about the interest rate. It's about the return on investment after your revenue is taken into account. So you got to take into account your debt service, your monthly operating costs, and your revenue to know if a deal is a good deal. And so that's why, like, most of the good deals out there, they're going to go quick. They're going to sell quickly on the market, especially for short-term rentals. And you're going to have to go through traditional banking. So that's why I tell people, like, the biggest investment you make isn't actually into the down payment. It's into the furnishings, into the amenities of the property, into the improvements. So your budget should really be focused on how much am I prepared to spend into the property, not how big of a house can I buy based on the down payment that I can afford.
Right.
So.
How about arbitrage? Are you doing any arbitrage? Have you done any?
Yes. Yeah, I have actually. Wow. I did do some arbitrage in Buffalo. And that was great. It was really, really good. But the biggest problem with arbitrage right now is just the regulation. That got shut down. I dealt with that in Buffalo. That's why I'm completely out of Buffalo, is because all of my properties that I personally didn't own, and even the ones I did own, I didn't live in the county, so I couldn't STR them anymore. And the other issue with arbitrage today is because of the amount of saturation and competition in the short-term rental industry. I mean, there's thousands of Airbnbs, okay, depending on the market, but especially in urban markets, there's tens of thousands. And so the problem is you have to differentiate. So if you have this apartment, if you have 20 apartments that are all the same and have all the same IKEA furniture, they're going to be the average. And the average is going down every single year for the last 3 years by 10% year over year. So you can't, that pretty much means like whatever properties we're making last year, they're not going to make the same as this year because there's more and more supply. And so arbitrage is gotten really difficult for a lot of people. And I no longer arbitrage, but it's just very challenging in today's market with short-term rentals.
Yeah. How about regulations? So, obviously there's cities like Las Vegas, Chicago that, doing short-term rentals in those markets is not what it was when Airbnb first came out.
Yeah.
There's been a lot of, neck tightening in these markets. Where do you see the industry going? What are markets to stay away from?
Yeah. So number one, it's important to understand that short-term rentals have been around for actually centuries. And you can look this up, but the first short-term rental that we know on record in the United States was in Portland, Maine in 1791. Okay. So like we have like the
Could you be more specific, please?
Yeah, exactly. Yeah. Well, I've just in this space long enough. I know the history and all this great stuff too. But the reality is like short-term rentals have been around forever. I mean, I mean, remember early 2000s, 90s, it was timeshares, right? This has been a business forever. So it's not going to go away, but how it's regulated does change. And so the first thing I always tell people is the most risky market you can invest in is actually a market with no regulation at all, because it's only a matter of time before they actually regulate that market. Even a vacation market, I see it all the time. They pass some arbitrary rules that require you to put sprinklers in your house or limit the number of people you can host or whatever that is. And so you want to enter into spaces today and going into the future that already have some sort of established rules, and they're collecting tax dollars because they like tax dollars.
Right.
And then with the cities, you need to understand community sentiment towards short-term rentals. So short-term rentals or Airbnbs are a very easy target, especially in urban markets where there's a very low housing inventory and prices are shot through the roof. Does it mean that because people were Airbnb that all the prices have gone up? No, I don't agree with that at all. We can talk about the economics behind that. But the reality is it's a very easy target for politicians to go, well, we're going to shut down the Airbnbs and that's going to help the housing stock. And so the community sentiment is incredibly important. That's why I advise people to buy in markets where the community sentiment is positive towards short-term rentals. And this usually means vacation markets because they rely on the tourism for their economy. That will help generally protect you if you're trying to enter into this space from any long-term changes in the future, because the urban markets are always changing and there's always fights going on. And, we just want to you want to avoid that. So,
yeah, but then if you look, you talk about vacation markets and you look at a market like Vegas, and they have some pretty stronghold regulations in Vegas on Airbnb.
They do.
And you would think, why?
Because of the hotels. That's why. And that's one of the problems. So it's a tale of two. I don't know if we want to go how deep into this, but it's a tale of two stories. So think about Uber and Lyft. So when Uber came out, the entire transportation industry, the taxi industry, they fought them. I actually know people who own transportation businesses who were like lobbying and paying hundreds of thousands of dollars to politicians to shut Uber down. But what happened? Uber is still here today and they're everywhere. They're not regular. I mean, sure, there's some regulation, but like it is everywhere, right? And so they won. Uber literally won. How did they win? Uber actually fought back. It wasn't relying upon the drivers to fight back, the people who were using Uber to fight back, but Uber, the company, got funding and fought back and lobbied themselves, and they won, right? The problem with Airbnb is Airbnb and VRBO, they don't fight back. They don't represent their host. They're trying to be a platform that represents but doesn't actually go in and lobby and try to fight back and stand their ground. And because of that, these cities, they take money from these hotels. And I mean, I totally get it. I'm a hotel owner in New Orleans. I don't want short-term rentals. New Orleans hate well, they don't hate them, but they pretty much do. Their rules are really restrictive. It's like Vegas. But they love hotels. And so what do? I go buy a hotel there because that's what New Orleans wants me to do. I don't go against the current. I don't against the grain. And then I help participate in the lobbying against short-term rentals. And I'm a short-term rental operator in other areas. And so it's really a understanding of, who is controlling what and what's Airbnb and the big players trying to do. And they really don't lobby. They really don't fight for, I think that was a big mistake that they made years ago. So anyway, that's, I know we can keep talking about that, but that has literally been the history of it in the last 10 years. And I just shake my head at it. And now I just say, you know what, if you can't beat the rules, follow them. Just join them, figure out what they want you to do. Just like I said, New Orleans, like it's not about, I'm not just going to go buy a short-term rental there. I'm buying a hotel there because that's what they're incentivizing. That's what they want people to do. So I bought a hotel there. That's going to make a lot of money. So.
Yeah. And when you own a hotel, are you putting those rentals on Airbnb or bookings.com or? That's
the crazy thing. You can. You can absolutely do that. And it's no problem. It's an exclusion permit because you have a hotel permit. So you apply, you get your hotel permit, and then you can apply for an Airbnb exclusion permit. And so you can list on Airbnb. It's all about finding, like people get so caught up when they hear the word regulation. They get so nervous and they back out. Oh, I don't want to do that. I don't want to deal with that. And it's like, no, regulation is set boundaries. Just figure out what the boundaries are and then take advantage of it because somebody else is. Right. That's why they came about.
So we all know the real estate market's changing, right?
Yep.
And there's no geniuses in the business, right? There's only market cycles. And we're at the bottom of this market cycle coming out. Where do you see Airbnb going in the next 3 to 5 years?
Yeah. So the industry,
and I don't necessarily, I know Airbnb is a specific company, but short-term
rentals. Yeah.
Yeah.
So even though the cycle is changing in general for real estate, the short-term rental market is still, quote unquote, the average is in decline. But what's really fascinating about it is if you flip and you look at the top 10% of performing properties, they're actually improving in revenue year over year. So while the average is declining, the top 10% is making more. Why is that? It's because Airbnb and the industry, the short-term rental industry, is maturing, meaning we're getting more towards we have to be professional hosts. We have to have nice amenities, nice places. We can't just rent out, grandma's spare closet or room, throw in some IKEA furniture and expect to make a profit. We can't buy in any old neighborhood and expect that property is going to get good reviews and not dinged on location. You have to be very strategic on what and where you buy. And so we have to have professional design. I think you have to be willing to invest into your properties in short-term rentals or you will get destroyed and it won't be worth it. It really, I see a ton of people, they buy average houses, they get average returns, and average returns aren't better than long-term rentals. They're what long-term rentals are doing. So it's like, why wouldn't you just go do something passive then if you're going to go through the effort of, setting everything up and dealing with guests and complaints and all this other stuff, right? So for me, the Airbnb industry, short-term rental industry is maturing. It's getting harder. It's getting tougher. So you got to be smarter about where and what you invest in.
Yeah. Where's your next property going to be?
Where's my next property? That's a good question. Man, I don't even know. It's going to be somewhere I wasn't even on the radar. I guarantee you it could be like I could see that South Dakota or somewhere random. It always shocks me, where the next one is. I'm like, I wouldn't have thought of that, but okay, here we are. So yeah, it's going to be in some other state. I don't know.
Yeah. Maybe I should have said, what's the next experience going to be? Right. I love the idea of 2 hot tubs and pickleball court and, all the other things that go with it. But, what's the next experience going to be?
I really want to buy a property. One market I've had my eye on, I'll say that. So I look at multiple markets at the same time. It's a matter of the right property coming up at the right time. And then obviously the right price. It's like a magical formula. But one market I've had my eye on actually is near Hershey, Pennsylvania. So having experienced in New York and the metropolitan areas, there's millions of people, like almost 20 million people within a 4-hour drive of Hershey, Pennsylvania. And there's not a lot of competition out there. And because I'm doing these resort style properties, I actually know someone who owns property and has done these before in the area, and the numbers he told me, it's just incredible what he was able to do and accomplish. And there's just not a lot of people because of the regulations, because of where and what you can't do, and so on. And so, I don't know. I hope by next year I'll have something in that market. So,
How about, do you raise capital from private investors?
I have once. I'm not gonna lie. It was, we could talk about it. It was a lot. It was like, there was a lot to deal with. I will call up, if I find something I really like and want to invest into. I got a little black book. I call people up and I'm like, hey, you want to go in on this? And 9 times out of 10, they say yes. So that's usually what I do. I prefer to partner. It's much easier.
Joint venture,
legal red tape than raising funds. But I do have actually do have a fund. So
yeah, sometimes the regulations and the disclosure and everything else behind doing that is tougher than if you have a little black book. That's for sure.
Exactly. It's easier to talk and deal with one person or 2 people than like 10 so on the same project. So I love them all. If they're listening, I love you guys. There's nothing against it. It's just,
right.
Numbers game.
I have to imagine though that some of the people that come and stay in your resort style STRs might be great potential investors in another one, right?
Potentially. Yeah, potentially. I mean, we're so focused on guest experience and making sure that people are coming. I mean, there's reunions, and we've even had people come for like mastermind retreats or even weddings. People want to do weddings on our properties all the time, and so because they're big, and it's just like it's all about trying to create this customized experience for them, because they're paying tens of thousands of dollars, and so I mean, maybe one of them is that's interesting. I'll have to to start figuring out a way to like seed that,
Yeah, right. Hey, well, listen, it was great having you here today. Why should people reach out to you, and how do they get in touch with you?
Yeah, so look, I tell people all the time I'm not that popular, and I hope I never really am. I tell people reach out to me on social media directly at Kenny_Bedwell on Instagram or Facebook, LinkedIn as well. Just Kenny Bedwell is the name. And so that just message me, and I'm happy to, if you're interested in buying short-term rentals and you want to start, or you're looking for your next one, you just have questions, just reach out to me. I'm happy to point you in the right direction. Or if you want me to actually help you, please, happy to share what I do with people individually. So people can reach out to me there. My company website is just strinsights.com as well. But I usually just tell people reach out to me directly, and I'm the best source. So
awesome. Thanks for being here. I get a lot of, requests to be on the podcast from, other short-term rental people. And for some reason, your bio stood out because of the experience type short-term, and I like that model better than just your typical, apartment or single family property or duplex in a market that, so there's more, I'm sitting here picturing, wow, going and staying at one of these properties and hanging out in the hot tub and playing pickleball and, having these experiences that really make it robust. So I appreciate you sharing this morning, and good luck to you guys as you continue to grow. I hope 2026 is going to be a banner year for you. And, Hershey, Pennsylvania. Don't eat too much chocolate.
Yeah, I know, right? Yeah, I've never been. That's the crazy thing. I just know it's a good area. So, but thank you so much for having me on the show. I appreciate this opportunity.
I appreciate it. Thanks for being here, everybody. And make sure that you're here every Saturday morning. Book this on your favorites and like us, love us, and tell somebody about us. We'll see everybody soon. Thanks.